Today is April 20, 3:37 p.m. and we saw unusual options on Meta. That's Facebook. And so the earnings is coming up. So that's something to keep in mind. That's on April 26th. So we'll be watching Meta, some of its unusual options as we get into earnings. And so the current unusual options that we're seeing today is you'll see here these very large contracts at 1228. You'll see here 2,542 of them, right? They're being done. You'll also see this 1241 here, this one here for 2,500 of them, right? And so we'll go over just the first one, just to save on time. But the first one here, you'll see here in the May 19 chain here. So this is obviously an earnings prediction because it is after earnings, 29 days away. You'll see here, and then the 170s are actually on the call side. It's pretty deep in the money. So you'll see here these 2,500 contracts here. And what's interesting is that also if you sell a call when it's deep in the money, it does take quite a lot of buying power. So for this, we calculated a little earlier, it was 8,700 buying power per contract. So this over here, let's say 2542. Well, if it was 8,700 per contract, then 2542, that required $22.1 million, right? So $22 million to put on this trade by selling those calls and then buying those puts at the 170. For the buying power, how did we know it was 87? Well, we have a quick way to find out. We have a video about this on how to calculate buying power. I'll put that on the top link if you have info cards showing up. Otherwise, you can search for that on our channel. And so this 22 million is quite a large trade. If we were to buy that put, so you'll see here, the volume is slightly larger than the open interest here. So we buy that 170 and then we sell that 170 call. And what we have here when we analyze this trade is a synthetic short. So you'll see here as the price from the 213 goes down, as the stock price goes down, the profit here on the y-axis goes up because it's above this zero line. So anything going below is actually profitable. So this is a short. It's a synthetic short. The delta should be close to negative 100 because it's basically like owning 100 shares of Facebook, but shorting 100 shares of Meta. The advantage of doing something like this is that the theta is actually positive. It's not negative. Like if you were to buy just options, and also if you just buy stock, the theta is actually zero. There's no theta on just if you just bought stock. So the advantage of doing something like a synthetic strategy here with options is the positive theta that you're getting from this trade because of the volatility that you're able to capture here. Yeah, so that's currently what we are thinking. This is, again, still a week away from the earnings report. We haven't made any positions yet, but we're just monitoring this the stock. You'll see here it's kind of indecisive here. It hasn't really moved since yesterday, and not sure where it's going to go with the bulls and the bears trying to decide. So today had a kind of a up and now it's back down. So yeah, so make sure you are subscribed and also hit that bell icon so you are aware whenever we see anything new on Meta, that you'll see the video come up, and we'll let you know what we think, because there are lots of unusual options that starts to come in right before earnings, and that could change our trade from a bearish to a bullish stance, like what happened to our recent Netflix earnings trade. If you haven't watched that video, we'll put that at the end of this video so you can see that, where we, at the end, at the last day, we saw the bearish options on Netflix. Okay? All right. Well, take care and good luck